Hey everyone, welcome to the KE Report, another daily editorial, this time chatting with Craig Hemke. Craig is the founder and editor of TF Metals Report. As we always do with Craig, just a quick recap of what's going on in the precious metals space. As we're chatting, gold still holding above $3,000 a level. It recently broke above 3,000 about a week, 10 days ago, and it's really held above that level quite nicely. We're also heading into the end of the month, the end of the quarter here. Craig, let's start with that, the timing perspective here. It has been a very good start to the year for gold, for the gold shares, for silver stocks. Again, really the best performing asset class, I think, around the world was gold in a lot of the gold stocks. Maybe there's some other asset classes that did well, but man, oh man, as we were talking for the first 3 months, really couldn't get any better for the precious metals. How do you look at now when we turn the calendar over to the second quarter?
Well, hi, guys. Yeah, I think we should preface all conversations. I do this with my daily podcast when we run down prices with the fact that, we're not talking $1,800 gold or $2,100 gold. We're talking $3,000 gold. And, you go back to New Year's Eve, the beginning of the first quarter, and if I'd said, hey, guess what? By the end of the quarter, we're going to be over 3,000. I mean, everybody would have been, over the moon. GDX trading at its highest level since January of 2013. Okay, so 12 years. So we got to preface all this with we're doing fine. And April to June is seasonally a pretty strong period for the precious metals. And so I would imagine, next quarter should be pretty good too. But we've had this great run, and we're now approaching a couple of key items on the calendar, which to me make me feel like we're probably in for some short-term frustration just in watching some red stuff on our screens. We're down on Monday. Now, several weeks as of late have started poorly only to finish strong, so keep that in mind. But we are at that part of the calendar where it's not only the end of the month, it's the end of the quarter. And so there's a lot going on behind the scenes of the gold market that typically have a negative impact on price. Wednesday of this week, the April gold contract will have all of its options expire in price. Well, it can be rather useful to look at the option open interest and kind of discern a point where the option riders or the short the options might have a price target in mind that would minimize their financial pain. It usually works out pretty well. And so we got that going for us into Wednesday. That's going to be, front and center as you consider the price action this week. And then by Friday, that April gold contract goes off the board and into its delivery phase through the month of April. Well, people recall the February gold contract saw something like 76,400 something deliveries, which is far and away the busiest, most extensive, highest volume amount of deliveries that the COMEX had ever seen in a month. So as we get closer now to this next delivery month of April, who knows, how price movements might impact those that were thinking about standing for delivery. So we got that there. And then finally, the last thing that will be in front of us is next Monday, the 31st. Not only by the close will we be painting the monthly charts, we'll be painting the quarterly charts. Those are obviously really, really important for grabbing the eyes of long-term and big-time institutional investors and hedge funds and the like. But it also will bring the last London price fix. You do that twice daily, AM fix, PM fix. The last London price fix of the month and the quarter will be next Monday, the 31st at 10 o'clock Eastern. Well, it's off of that fix that uncounted thousands, hundreds of thousands probably, over-the-counter options in London will be priced. Just like, the COMEX close will price the COMEX options this Wednesday, that price fix next Monday will price all the London options. You just go back, I'd invite anybody to go back if they don't remember what happened on Friday the 28th of February. You might pull up a chart if you've forgotten. Price plunged for about an hour and a half from the COMEX open right up into that final PM fix of the month. And so I wouldn't be surprised if we're pretty choppy next Monday too. Then after that, we'll get in the new quarter, be looking at the job report, all that stuff. Good seasonality, as I mentioned, we'll probably do a little bit better once we get into April.
Well, Craig, I do think it's significant the next Monday, end of the month, end of the quarter, and there are so many factors at play. But are you surprised at all? And I asked you this off mic, but are you surprised at all that gold in particular has gotten up over 3,000 and just stayed here? Because when we tried to approach 1,000 in gold and 2,000 in gold, there was a lot of turbulence. In fact, it was very difficult to get there and it would quickly reverse it. A lot of people were expecting to see the same thing at $3,000 gold, but it seems like it just cruised on through and has stayed well above it now for really the last week and a half. Does it surprise you how strong the yellow metal has been?
In a way, yeah, Shad. And there could be all kinds of factors impacting that. $1,000 back when that was what, March of 2008. That was just like people were like, "Wow, it's never happened before." And obviously, 3,000 never happened before either, but it didn't quite have the grandeur, as an accomplishment that 1,000 did. Or even the fact after, we went to 1,900 and all the way back to 1,100, getting to 2,000 in whatever it was, August of 2020. That set off a lot. Now we're just kind of in a bull market. So it wasn't like it was ho hum, but it was like, okay. And I think there are a lot of technical, people who use Fibonacci numbers and things like that. And they're, even in my forecast for this year, I thought we'd go through 3,000 to 3,100 and then, kind of run into a consolidation period. So there were other things like it didn't make 3,000 as much of a benchmark as it might have been in the past. Now, that said, watch that $3,000 spot price and the $3,000 price for the April gold contract too, because it's a number, it's a round number. There's a lot of open interest in the COMEX calls and puts at $3,000. So that price will probably act as a magnet for the April contract through the close on Wednesday. But I would imagine, again, there are no official data. We just know that there's thousands, maybe hundreds of thousands of options traded over the counter in London that price off those fixes. There would be, you would think, quite a bit of action around a $3,000 spot price next Monday, too. Now, again, those prices aren't dramatically lower than where we are right here on Monday the 24th. So maybe it's just, we're just going to kind of have a sideways week. But I think all of that does overhang things. Typically, you move through an important level, a breakout level. I don't know if 3,000 was really a breakout level. Maybe 2,960 was. But anyway, typically you'd break through, right, and then pull back and test what was resistance as now becomes support, that sort of thing. We haven't really seen that yet. Maybe that's what'll be accomplished through this week of option shenanigans. Is we'll at least kind of pull back to some level, test it as support, and be ready again, like I said, for what should be a pretty good month of April.
Let's focus a little bit more on silver too, because silver has been doing very well. The low in 2022 at about 1750. Silver chopped around in early 2023, but generally at a higher level, and then has more or less just taken off here. Now we're looking at pretty much the highest monthly close in over a decade. But it just doesn't seem like the silver stocks are really joining in to a big extent. So, Craig, what are you seeing in the silver market? Is it that much different than gold in your eyes?
It's such an odd market because technically it's so small. I shouldn't say technical. I don't make it sound like a technical analysis. It just compared to other markets, it's small, and it seems it's such a focus for me and maybe for you guys and so many people that follow it on Twitter and the like. But it's just so overlooked. Even when Trump put out that executive order last week, saying, we need to develop critical minerals here in the U.S. and we're going to fast track mines and all this stuff. What did he list? He said like gold and uranium and coal and all these things. And he didn't even list silver. So it's like until it really breaks out and, and is going crazy and going up $4 and $5 a month, it seems like nobody even really pays attention to it outside of our little circle. So the silver miners then, of which there are few, just don't have that level of, excitement, interest that would drive them higher. I mean, many of them are doing well, but a lot of them suffer that, that minor affliction, if you will, of as soon as they report any good news, the thing goes down because people are like, well, that's the last of the good news for 90 days. I might as well just get out of this one and come back later and see if they're doing better, 2 months from now. So it's all very frustrating. Where silver goes from here will be fun to watch. If you pull up Not so much the futures chart, because that gets all bumpy with contango, as you go out the board. And if you look at the May contract where it was back in October versus whatever the front month, the December was back in October, it's sometimes kind of hard to equate the two. So if you pull up a spot price of silver, like on bar chart, it's SIY00, or maybe you can find something XAG USD. If you pull up the spot price and you look at a weekly chart, there it becomes pretty clear. We really need the spot price to break out and hold above 34. It's gone up above 34 6 or 7 times on a weekly basis since, October. And it just can't seem to get above there and stay there. So maybe that's what we're looking for. Get above 34, start breaking away 35, and then maybe some actual excitement and interest will feed in. But for now, hey, you know what? You made a great point, Corey. We were $17 a couple of years ago. So those of us that were buying back then, I remember buying silver at like $12 back right when COVID was starting. That's all working out okay.
Yeah, overall, silver has had a pretty good run over the last couple of years, and it's at a good price for producers. Now, because its hybrid nature is it's industrial, a lot of people are looking at it almost like a copper sometimes, like a base metal, and thinking, how does this play into any potential contraction in the economy, recession, stagflation? But you look at something like copper, Craig, just earlier today, it got up to $5.18 a pound. That's 2 copper pennies away from the all-time high last year in May.
Yep.
And it seems like there's no fanfare for copper either. So are the industrial metals like copper or the part of silver that's like that, maybe not sure what's going on with these tariffs and with the economy either, because this copper is supposed to be a harbinger, Dr. Copper of the economy, getting up near all-time highs for all of mankind to get up near over $5 doesn't reek of recession coming around the corner, yet most pundits think that we're in for a pretty tough year. What do you make of that dynamic in these metals?
Yeah, without, we could, I'm sure, talk copper all afternoon about the underlying fundamentals of copper, and I'm sure you guys and the people listening to us have seen, the memes on X and stuff about the amount of copper that's needed over the next decade is greater than the amount of copper that's ever been mined, in history or something like that. I mean, the fundamentals are great. Right now at present, and I got to give credit, I don't know who pointed this out to me. I saw this on Twitter this morning. Because I was noticing last week, and I didn't make the connection, but I was noticing last week, as you said, copper's moving up through $5 a pound and got all the way up to $5.20 on COMEX this morning, or very close to it, which is that high from last May. Well, last May, the London price was north of $11,000 a ton. Well, today, just actually back on Friday, the London price just finally got to $10,000 a ton. So it's a good 5%, 10% off, the equivalent of COMEX, which then made me, again, which I hadn't thought about until I saw somebody make this point on Twitter. That's a little bit like what's gone on in gold and silver over the last, 60, 90 days, where you had this wide premium develop between the spot price and the futures price. And what's the spot price? Well, that's recognized as kind of that London, spot price. And you go, it's $30, $40 in gold, up to $1 in silver. What's that? 3% silver, maybe it was 2% or so in gold. Well, what are we talking in copper here? From if it was 10,000 versus 11, that could be 10%, I guess. So I don't know if an interesting thing to consider with copper here is, now is copper getting that same kind of treatment where nobody wants to arbitrage it? Out of fear of future, big deliveries, and not being able to get the copper to the U.S. to get it in the COMEX vault so you can deliver it versus your arbitrage. I hadn't really thought of that, like I said, until this morning. But I just wonder if, again, this isn't another little chink in the armor of the pricing scheme that copper is sniffing out.
Craig, let's face it, what's driving markets right now, and I think especially precious metals, but even copper, is political aspects. The world is broadly in a trade war that is a very confusing trade war because, as I was telling you off mic, it seems like every time we get close to the end of the month, it feels almost like a Fed week where we used to sit around going, will they raise? Won't they raise? What are they going to do? Now we're sitting at the end of the month saying, what's Trump going to do? Is he going to ramp up tariffs? Is he going to push them off? But a lot of that global uncertainty definitely helps precious metals. And I think for copper, because the narrative around copper and it being a critical mineral, that seems to get some more of the political money coming in because of that whole uncertainty. How, or is it even possible to somehow separate the political noise, this ongoing trade war, from other investment fundamentals? Or is that just the world we're in right now where, quite frankly, we are going to be so politically focused for just under 4 years now that get used to it?
Yeah, I do think it's the get used to it part. It's like back during the first Trump administration, every time there was a headline that included the term trade war, the algos would go crazy and either buy or sell the S&P futures, that kind of stuff. So this is the new normal again. The day-to-day stuff, though, that you're talking about in a little bit, and not that the tariffs are day-to-day, but they kind of are in the realm of the day trader. You got to stay really nimble, and how that might all impact. Those tariffs are supposed to go into effect, on the 2nd? Well, from a long-term standpoint, though, like I said, those fundamentals of copper, that's kind of what I think most of us need to focus on instead as investors, not traders. The other thing about copper that I failed to mention earlier, what is the amount of stimulus that has been projected by the People's Republic of China this year? I mean, I've seen everything from like $750 billion worth to something well over $1 trillion of just cash creation, just floating out the yuan to support their economy. Well, again, that leads to more demand in something like copper and silver, and go down the list. So there's all these fundamentals that then, on the bigger, longer term picture, I think it's just too easy to lose track of. Which is why I just try to avoid the day trading myself anymore, just because I get so hit in the face every day with all these news items are just flying at me. I twist myself up into knots. And so will the tariffs have it, what's going to come next week? And, will they all be, remember, was it just last month? It was like, oh yeah, this is it for sure this time. And then 2 days later, it's like, well, we don't know. Maybe the car sector, we won't put, it's enough to drive you crazy. But I think if you look at the longer term stuff, that stays in play. And one last thing I'd add, Corey, and I don't want to forget to make this point, this idea of copper, whether there's now, we got to get some copper across the pond into the COMEX vaults, to try to close, if there is an arbitrage there, just like what they were saying was happening with gold and silver. At the end of the day, what I wonder more about is if after 3 consecutive years of 1,000+ metric tons of net central bank demand, drawing down the available float of gold that can be delivered in London when they actually, where the physical hub is, then maybe that's what ultimately is stressing the system. And so then that, the systems, the pricing scheme works the same in silver and copper and everything else. So maybe, just maybe, on a fundamental basis, all of the actual physical things that we know are having an impact too. And again, that'll continue to be a big story going forward, where the tariff stuff, as you mentioned, Corey, just kind of ebbs and flows.
Well, Craig, just kind of circling back to the prior question I was asking you, I'd love to get you to weigh in on if you think we're going to see a contraction in the economy, or are we in more of a stagflation where we're going to still grow, but at a stagnant pace, but maybe see inflation be higher than we want it to be, and then maybe the jobs market get hit. When you look at the macro data, when you look at, like, let's put tariffs on the shelf for a second and just look at things in lieu of how you came into this year with your macro cast and the bigger macro forces at work, how will that affect growth in the U.S. and how does that then translate over into those industrial metals?
Well, before I answer that, Shad, I'll remind everybody, I thought we'd be in a recession in 2023. And then I thought, well, okay, it didn't happen, but I think it's coming in 2024. So when I say that I thought 2025 would bring a recession based on some different factors, just the history of an inverted yield curve that reverts back to a positive slope, always happening right as the recession begins. I still think that's where we're headed. Now, you could make the case that the only reason the U.S. hasn't been in a recession is through all of the $2 trillion of deficit spending. That all of the growth in the U.S. economy, on a nominal basis could be deliberately attributed to the $2 trillion in deficit spending that the government's been doing. So unless they get that under control, maybe recession can continue to be held off. Heck, the monthly Treasury statement this month that summarized February. First 5 months of the year, because the fiscal year in the U.S. began October. The first 5 months of the fiscal year were already well ahead of the pace of spending and this pace of deficits from last year. Like 1.2 trillion already, or something like that, in total deficit in just 5 months. So anyway, I would expect a recession for all these historical, guideposts that are there. But Trump's Doge team, notwithstanding, if the U.S. government continues to run a $2 trillion deficit, and it flows out into the public sector, with all these public sector jobs and programs and everything else, then maybe recession continues to be forestalled just by, by the traditional measure of GDP. So stagflation, Chad, I think is something we've been discussing for, 5 years from now, just a very slow economy with inflation. I think you're already seeing signs of that. But outright measured, 2 straight quarters of GDP, well, I think we're going to get there, but, got to remember who you're talking to here. I don't have the best track record at that.
Appreciate your honesty there, Craig. Like a lot of people still waiting for that recession. Does seem like we're seeing a lot more weakening economic data right now. Inflation, is it going to scream higher? Is it going to stay sticky? So many questions this year. Again, all circling back to what's happening on the political front, because that is causing a lot of fear and a lot of uneasy vibes in the markets as well as in these economic predictions. So always stuff for us to talk about, but overall, look, this first quarter, very good for precious metals and other commodities too that also joined in. So we'll see what Q2 has. Craig, thanks for joining us. Again, everyone, click the link in the show notes. Visit Craig's website, tfmetallsreport.com. Craig, have a great rest of your week.
Thanks, guys. You too.